Welcome back to another update video, my fellow DGen traders, and man oh man do we have a lot to chit chat about. As I'm filming this, we're roughly 1 week into the month of August and things are looking pretty good, pretty green for the bull camp, which really brings me to the three major things I want to talk about in this video. Number one, why things have been so incredibly strong, and really, probably more importantly, why I think it's going to be continuing into this upcoming week. And if you've been watching some of the recent episodes, you know that I took a bad beat losing $30,000, and then I started sharing my exact positions and reasoning and what I'm seeing in the market of how I'm going to aggressively try to make that money back. So of course, I want to give you an update on all of those as well. But before we get to that, if you enjoy these type of videos, don't forget to like, subscribe, share it with your grandma. With that being said, let's rock. I very much hope you are watching this video in time before market open on Monday the 11th, because there's a lot going down this upcoming week. But to better understand where we might be going, we should get a really comprehensive understanding of where we've been. So when the market closed out on Friday, August the 8th, here was the official headline. S&P 500 rises, NASDAQ closes at record Friday as Apple shares rally. So the overall market, we didn't hit an all-time high, but we're very, very close. In fact, percentage-wise, we're only off by 0.6%. So the S&P 500 looking very, very good, still building out in this channel. If you looked at the options flow, pretty strong. We've seen better flow, but overall still looking pretty good. And I do want to let you know that I'm still holding on my position. SPY 638, playing for later August. Really, I'm just looking to play this channel. Higher highs, higher lows. It's above my momentum. Options are looking good. So yeah, I'm going to keep riding this as long as I can. Currently up about 34%. As that headline alluded to, the NASDAQ, the tech-heavy index, did hit a new all-time high in terms of just its high value and its highest closing price, once again, Friday on the 8th. Looking very good there. Same thing pretty much as the SPY, a lot of similarities, but you could see higher highs, higher lows. We're on top of all the major EMAs, so strong momentum. And then looking at the options flow, very, very strong. We're seeing a lot of call buying, a lot of put selling. That's exactly what you want to see if you're in on the bull camp, which makes me uniquely happy because not only did I play leverage options once again on the NASDAQ, which has been looking phenomenal, but I even upped it more by playing it on TQQQ. So basically, am I a degenerate? 100%. Options already 100x leverage, and then you look at TQQ to get even more leverage, and that's exactly how I'm up about 63%. So looking very good there. With respect to the overall market, the S&P 500 and the NASDAQ, the larger picture, why are we looking so good? Well, it kind of relates to the administration. Trump's planned 100% computer chip tariff sparks confusion among businesses and trading partners. That's the main headline that's being pushed by a lot of major media outlets. And at first, that almost sounds like it has a negative connotation, but then you might be looking at the market and be like, well, why are we pushing? In reality, it's not as confusing as mainstream media would have you believe. Trump plans 100% tariff on semiconductors with big exemption. Trump said he will exempt chip companies that are making their goods here or have begun building plants here. So basically, he's forcing everyone to come back to the US or they're going to really be facing massive tariff bills. If you're building in the US, there's no charge. I think the chip companies are all coming back home. Of course, this is very good for the companies who already said, hey, we're going to be building in the US. So they're trying to sidestep these tariffs. I mean, check this out right here. NVIDIA chip stock jumps after Trump says some chip makers exempt from the 100% semiconductor tariff. NVIDIA, currently the world's biggest stock, got even bigger because once again, NVIDIA's like, yep, we'll build it in the US. Not going to be impacted by that, at least as of our current understanding. And even though it's not directly related to the world of semiconductors, remember this last week was also big in other aspects of tech, including Tim Cook and Apple, and right here, Apple consolidating pretty much since April. Huge pump recently over the past couple trading days. In fact, up 13%. And this is why still Apple's a top 3 stock, but really it does relate to pretty much the same vibe of big tech companies saying they will invest in and build out in the US. Those stocks are all flying right now. How Tim Cook convinced Trump to drop Made in USA iPhone for now. Apple CEO Tim Cook on Wednesday appeared at the White House with President Trump to announce plans to spend about $600 billion over 4 years in the US, once again bringing dollars back to the US. But on top of that, Apple CEO Tim Cook's $100 billion commitment to the US manufacturing came with a gift from Trump, a glass made in the USA plaque mounted on 24 karat gold. You know, I've always said this, and I deeply believe it. Our version of the simulation, absolutely wild. So basically, here's the TLDR. The overall market is doing well because the tech sector is doing well. The tech sector is doing well because obviously we're still in this AI hype phase, and those companies, which are now worth billions, if not trillions of dollars, depending on the company you're talking about, are kind of getting a free pass if they've already been talking to the administration about building out in the US. And some of the largest ones have already said they're going to do it, which is exactly why they're pumping even more. You're taking out all of this concern of how bad will the tariffs be, because right now the market is looking pretty optimistic that they're really going to be sidestepping quite a few of them. So obviously that's all on the equity side of things, but you might not be surprised to find out that the crypto side of things is also looking very good. Bitcoin, once again, not at an all-time high, but pretty close. And actually, as I'm filming this, we're kind of getting this trend line breakout, or at least this testing at 118. When we closed out the week, it was closer to 116. So Bitcoin looking pretty good. And for those of you who've been watching this series, you know that I'm in a leverage play. So BITX, I have calls. Yes, it does say I'm down. That is unfortunate. But remember, that reading was from when the options market closed on Friday, when Bitcoin was trading at like 116 and some change. Now we're trading at 118 and some change. So hopefully this keeps going. And when this opens up for the options market on Monday, tomorrow, we're gonna be ideally looking pretty good. And even though I don't personally have a position in this, I should let you know, Ethereum also looking phenomenal. Not that long ago, trading at 1,400, currently trading just above 4,000, looking very, very strong, as we saw in Bitcoin and the NASDAQ and the SPY, higher highs, higher lows on top of the momentum. And if you're checking the options market, surprise, surprise, people are buying a lot of calls, selling a lot of puts. That's a lot of positive delta. I think you get the overall picture. Both the equities, crypto, and really I could add on the options market are all looking pretty bullish. The major things I pay attention to: price structure, higher highs, higher lows, that is bullish. Price momentum, most of these major averages are above their whatever, the most popular EMAs, that's bullish. And then when you look at option structure, it is being supported by a lot of call buying and a lot of put selling. So across the board, as of right now, the bulls are in control. But the golden question here is, where are we going? The S&P 500 is on the cusp of another record. How long can this bull keep dodging danger? Obviously, no one has a crystal ball. We can't say this with certainty, but I can tell you what to pay attention to. And this upcoming week, it all relates to inflation. US inflation to rise as higher tariffs feed through. So this upcoming week, we're going to be getting a CPI reading on Tuesday and then a PPI reading on Thursday. And also, even though it's not directly related to inflation, they're kind of cousins, we're going to get retail sales on Friday. And on top of that, let me remind you that we're also in earnings season. Granted, most of the major ones have already reported. On this list, you might be caring about, let's see, AMC after the market closes on Monday. Archer, I see a lot of people in chat talking more and more about that. Tuesday, Circle, if you're paying attention to stable coins. Kava, Rigetti, I see those are somewhat popular. So like I said, we're still technically in earnings season. It is calming down. I would argue that the last major one the world is waiting on is Nvidia, but that is not going to be reporting this upcoming week. But anyway, if you're involved with any of the ones on the screen, feel free to screenshot this, do whatever you need to, write it down. But yes, we're still technically in earnings. So we know that the overall market is red hot. Well, I guess in this case, green hot. We know we have a lot of inflation reports and retail sales coming this upcoming week. We do have some earnings, but please don't forget about seasonality, because August, at least historically, is kind of an awkward month. Over the past 20 years, August, we've seen that it just kind of nets out to nothing. At first, it's a little bit of a sell-off, then a little bit of a pump, then a little bit of a sell-off, then a little bit of a pump. And remember, this is just how things have gone in the past. It's no end-all be-all, but really, it's not a strong trending month. Once again, that's the last 20 years. If we look at the past 5 years, you can see that this upcoming week is slightly, favored by the bulls. And even the past 3 years, same thing. This upcoming week, it is slightly favored for the bulls. So obviously I want you to know that, but once again, is not the end all be all. And for those of you who really want the specific data, as in like the individual days, that's exactly what the newsletter is for. MattKohrs.locals.com. It's 100% free. It's always been free, always will be free. I break down what's going on in the market, cheat sheet of the earnings, cheat sheet of all the major macroeconomic events, and then the seasonality for each individual day. So unfortunately, to start out the week, you could see that Monday's a little bit more bearish, followed by Tuesday that's a little bit more bullish. Same thing on Wednesday, same thing on Thursday, and then Friday is actually where we see legitimate bullishness. I know I've said this a million times, and I'm going to say it a million more, but seasonality, it's good to know for your tailwinds and your headwinds, but it is by no means an end-all be-all, such as any, individual indicator. They all give you a little piece of the puzzle, but none of them are like the source of truth themselves. Please don't forget that. I should also let you know that this upcoming week, beyond momentum and options and schedule reports and earnings, we have a specialty thing that could have a huge impact on the global economy and thus our economy and thus our stock market. White House is considering inviting Zelensky to Alaska. I want to make it clear that none of this is really etched into stone, but apparently there's a chance of Trump, Putin, and Zelensky all meeting together. So we know that Zelensky might be going to Alaska, and we also know that the Trump-Putin meeting might be happening. Prediction market sees big jump in Trump-Putin meeting odds, so recently just really spiking. So just something to consider because, hey, if there's a giant resolution, that's going to be massively bullish as just like tensions simmer down. But don't forget, it could go the other way, and all of a sudden tensions might get worse, and then that obviously might have an adverse bearish effect. So I have no idea or model on how to predict this. I just want to let you know this upcoming week, there is a non-0% chance that there's going to be a meeting between Putin, Zelensky, and Trump. So please pay attention to that. That's pretty much all the major things that I wanted to break down for you to get you ready for this upcoming trading week, as we're about halfway into the month of August, or at least we will be at the end of this particular week. But for those of you who have been watching this recent mini-series of my effort to get back that $30,000 that I blew out for being absolutely stupid, you're going to probably notice that there's two positions that I haven't really talked about, and I just didn't know where to put them in this video, so I still wanted to let you know how those are going. Not too long ago, I bought a bullish call position on this hood breakout. Higher highs, higher lows, a little bit of a pullback. We broke out. Not only did we have this bullish price structure, we had bullish price momentum, and surprise, surprise, options were looking pretty good. I still have that Robinhood position, and right now in real time, just to be as transparent as I can, it's looking pretty good, up about 49%, but I did add on an extra one. To me, this play, this Netflix breakout, not that different than this Robinhood one. Granted, the momentum is better on Robinhood, but overall, the picture of Netflix is higher highs, higher lows, pullback, trendline breakout, recapture of the EMAs, strong options flow. So I figured, hey, it's worth the risk, and that one's up about 28%. So thus far, things are looking pretty good in my effort to recover all that money, but obviously this upcoming week is going to be a pivotal one. And if you enjoy this, I'll keep updating you guys, because honestly, I think that we all need a little bit more transparency in the world of retail trading and live streaming in this content generation, because it's the one major thing that seems to be missing. But hey, that's just my humble opinion. Of course, if you have any questions, comments, or concerns, let me know in a comment below. I'll do my best to get back to all of you. That's what I have for you now. I appreciate all the good vibes. I'll catch you in the next one.